Good morning, everyone, and thank you for taking the time to join this Energy Resources Law Association Technical Insights session. My name is Nadia Karlich, and I'm a Projects M&A partner at Clifford Chance. I also sit on the Energy Resources Law Association Board and Knowledge Committee. I acknowledge the Gadigal people of the Eora Nation on whose land we meet today. I pay my respects to their elders, past and present, and also to all Aboriginal and Torres Strait Islander peoples here today. Before we get started, I just wanted to mention that we have our Energy Resources Law Association annual conference occurring in person on the 19th to the 21st of October in Perth at the Pan Pacific Hotel. It's the first face-to-face ER law conference that we've had in 3 years and a great opportunity to catch up with friends and colleagues and renew your networks. There'll be plenty of opportunities for networking from the opening event on Wednesday evening through to the conference dinner on Thursday evening, and then we have closing drinks on Friday afternoon. The program is of the usual high standard and relevant and topical and pursues the national theme of evolution of resources and energy industries, powering future resources development. There are a few spots still available, so please do get your registrations in and rejoin the Energy Resources Law Association family in Perth in October. Now back to the program for today. I am delighted to introduce you to Stephen Hinchcliffe, our esteemed speaker this morning. Stephen is Technical Director and Energy Advisory Leader at Mott Macdonald across Asia Pacific, New Zealand and Australia. He has over 30 years' experience in the delivery of strategic consulting services to power network, power generation, renewable and clean energy sectors. He has a master's degree in electrical engineering, business administration and commercial law, and a PhD in power inverters. He advises developers, financiers and governments on all things energy related. So welcome, Stephen. I'll start with a bit of a scene setting to explain why this topic is so important to our practices, whether you're sitting in a corporate practice, a finance practice, a litigation dispute resolution practice. The breakdown of the national electricity market a few months ago raised huge questions about Australia's transition to a low carbon economy. And when we say breakdown, what do we mean? We mean that the Australian Energy Market Operator took the unprecedented step to suspend the national electricity market in favour of directly controlling the output of power plants. Why did that happen? Maybe it's because we had almost 30% of coal generators offline. Maybe we have an inflated price for natural gas and coal driven by many factors, including geopolitical. We have lots of renewable energy, and lots of demand in the system because of cold weather at that time. So that was basically a perfect storm, and Stephen will be able to provide us with much more information on the situation. Some of the topics we're planning to cover today, noting that we may need to hold a follow-up session if we don't get through it all, include the energy crisis that I just mentioned earlier, setting the scene, and then we'll talk about some of the recent and proposed changes to the national electricity rules and the implications on renewable energy generation. Next, we'll talk about marginal loss factors, and then we'll talk about system strength. Following which, we will try and respond to as many questions that you may have as possible. And just as a matter of housekeeping, if you do have questions as we run through the session, we would be very grateful if you can pop them into the chat, and we will seek to tackle as many of them as possible at the end or as a follow-up. So without further ado, Stephen, over to you.
Thank you, Nadia, for that introduction and those kind words. I feel somewhat embarrassed. So I'm Stephen Hinchcliffe. I work with a company called Mott Macdonald, and I'll talk a little bit about Mott Macdonald at the start, for those of you that aren't familiar with us. And I'm going to talk about energy market failures. Nadia's actually covered most of it pretty well. Changing market rules. That's a bit information dense. I have to flag up to start with, but I'll try and sort of pull out the salient points, particularly with regard to renewable energy developers and also existing generation system operators. Then I'm going to talk about marginal loss factors, which are a significant inhibitor to the transition to renewables, can be, and system strength, and similarly. And I've just gone through that, so I'm not going too hard. Who's Mott Macdonald? Well, we're founded in 1880, so we're about 140 years young. We work in 150 countries, 17,000 people globally, about $2 billion turnover, and got 1,300 people in Australia, and actually growing quite rapidly, and we grew quite rapidly through COVID. We've been in Asia Pacific since 1903, and in Australia, and some of our forerunners in Australia were involved in some of the first lighting schemes, for example, in Brisbane. So a reasonable pedigree. We are very proud that we're carbon neutral. We're certified carbon neutral, and we have been now for a number of years globally. And we've done that not only by reducing our own carbon footprint, but also by investing our own money in carbon sinks, such as rehabilitating peat ecosystems in Indonesia, for example. So as Nadia mentioned, we're going through a tremendous transition at the moment, which I liken to the time of Edison when he was developing his lighting schemes for housing and industry in the US, and then more recently the transition from city-based generation and distribution to a centralized system of centralized power stations and what we now know as the grid. And that transition means that we're kind of changing the whole ethos of the way the energy market runs, in that we're now putting renewable generation out at the fringe of the grid in many cases. We're expecting the grid to do things that it's not designed to do. We've got challenges around what happens when the wind doesn't blow and the sun doesn't shine in terms of storage, which I won't talk on particularly in this, but it is an area that is often overlooked. And I'm going to talk about the impact on the network in terms of system strength and the volatility and declining margin loss factors, as well as some of the rule changes, which I mentioned earlier. First off, the energy market failure. So as Nadia said a few months ago, AEMO shut down the market and dispatched generators, not on an economic basis, but on it would have been on a merit order basis, I should say, but not through the typical market mechanisms of generators bidding in. So a little bit about the spot market. I'm sure you're all aware of this, is that generators bid in for each 5-minute interval, and then generators are dispatched on merit order, which includes not only their proposed price for generating at that time, but also their loss factor. So their marginal loss factor is factored into that. In June 2022, AEMO suspended the NEM spot market for 14 days, and largely through the fact the market had hit its maximum price on several occurrences. And it was clear that generators were not responding to the market. And why didn't respond? Well, a whole raft of reasons. Nadia said some of the coal-fired plant was shut down for maintenance, excuse me, or outages. The international gas price spike meant that a lot of the gas-fired generators couldn't bid in and still make money, and so they simply didn't bid in. And at the time, there's also relatively low output from solar and wind in the winter conditions. And I mean, just on that point, recently in Queensland and New South Wales, for that matter, with the rain events that we've had several days on end with very little renewable generation being put onto the system, which has stressed, if you like, the remaining fossil fuel plant. And you could ask the question, why a coal-fired plant becoming so unreliable? Well, there's a couple of reasons. It's complex, but there's a couple of main reasons. One is, who's going to spend money on kit that when you know you're going to decommission it in a little while? So, minimum spend on maintenance. But also, we're asking them to do things that they weren't designed to do, which is flex their generation, which puts strain on the generators. So that was the background. So EMO had to step in. They suspended the market. They directed a significant amount of generation to come onto the grid during suspension. Under the rules, those generators had a maximum payment allowable, which actually was below their operating costs. So outside of the market, EMO has had to further compensate those generators. And clearly it's resulted in significantly increased electricity costs for consumers. And I'm going to be a bit controversial here. You see, I hear a lot of people say the transition to renewables will reduce the cost of electricity supply. No, it won't. Sorry, stop, period. It won't. Reasons why. It's not only the cost of putting the generation in, but it's cost of the firming, it's cost of the need for long duration storage when you have those days, potentially days of very little wind and solar output. And just on that, I did a piece of work for a state government asking the question, how much will we need? And at 75% penetration of renewables, when you close down most of your fossil fuel fleet, the amount of water storage, if you're looking at pumped hydro, that you need in the upper reservoir was equivalent to 1.6 million Olympic-sized swimming pools of water, or about 7 times Sydney Harbour. That's just for one state. That's a lot of storage and a lot of infrastructure hanging around, which is why we may need to look at a capacity pricing mechanism. Will it occur again? I think it's highly likely. With the La Nina energy patterns, coal prices remaining high because of what's happening in Europe, among other things. And coal-fired generators becoming more expensive to operate, as I mentioned, because they've been asked to flex and rather run base load, they've been asked to ramp up and ramp down, which is not quite what they're designed to do. We take a view that supply will remain tight over the medium term. There's a lot more, as we know, coal-fired power plants have been retired and are scheduled to be retired, and most of them by 2036, and we've heard that a number of coal-fired plant operators talking about retiring plants earlier than EMO had anticipated. If you look at their generation retirement web site, the spreadsheet that they have, the transition to renewables will require not only storage, but a lot more transmission infrastructure, which is why costs are going to go up again. And it takes time to build that out. I'm sure most of you have seen in the integrated systems plan that EMO has talked about over $10 billion worth of transmission infrastructure that needs to be built over the next little while. And frankly, you can't do it overnight, not least through planning consent issues, get route selection, but also supply constraints. And that's going to impact the whole of that transition to renewables. I did hear a talk recently, and I'm kind of going off topic here, but at a Connecting Green Hydrogen conference, where one of the presenters said that gave a figure of we needed to import 9 million wind turbine generator blades to meet the immediate foreseen development of renewables. That's a lot of blades. And of course, along with that, you've got all the rest of the equipment, since we don't manufacture much in Australia. So I would like to see more market suspensions. I think we are. And that obviously has led to, as well as the growth in renewables, which has kind of cut the market operator out, there are a lot of rule changes to try and maintain the integrity of the system. So as we know, the sort of 3 tenets of the electricity system are secure, safe, and efficient operation. So one major rule change that impacted renewable developers was relatively old rule change. I'm sure you're across it. 2017, trying to address system strength, which actually cut out the market operators. They didn't anticipate the impact of renewable generation on the system in terms of system strength. And I will, excuse me, I will talk about what system strength is towards the end of my presentation. But essentially the rule has 2 limbs. One is that if system strength declines as a result of a natural decline of system strength on the system, I should define system strength. It's the sensitivity of the voltage on the network to a disturbance. A lot of people talk about short circuit current ratio and stuff like that, which is kind of a proxy, but ultimately it's how stable the voltage is of the network when the network sees a disturbance, which could be anything from a conductor clash through to a capacitor bank switching in and out. So if there's a decline in system strength, then the TNSB, relevant TNSB, has to address that, generally through more network, but they do have non-network solutions, and the typical approach is synchronous condensers. If, however, the reduction in system strength at a node is a result of a generator wishing to connect, then as part of the connection agreement, that generator is obliged to do something to maintain system strength at the minimum or above the minimum level set by EMO. And that could be putting a synchronous condenser on with their development. It could be contracting with somebody to provide that service. Either way, it's a cost impost that doesn't generate any revenue for them. If anybody's interested in system strength, by the way, there's a report on the ARENA's website, which was jointly written by my team when they were in GHD and PowerLink, which is called Managing System Strength During the Transition to Renewables, which is really aimed at a broad audience, trying to describe what is a technical complex subject as simply as possible. So it's a great read. It's a real page turner, even if I say so myself. So there's a number of rule changes being discussed at the moment. One called indiscrete events, which to me is a bit of a misnomer, but what it really means is events that we know will happen, but we don't quite know what will happen, and we don't quite know what will trigger it, but we know when it does happen, it could cause multiple failures on the system. So that rule change will give more powers to EMO to increase, for example, the flow through interconnectors, to require generators to be dispatched to back off renewables and so on, potentially quite wide-reaching powers. Then there's a retailer reliability obligation, which to me is misguided. Maybe that's a bit controversial, but anyway, it's an attempt to put an obligation on retailers to try to manage system stability. And there is talk about a market mechanism similar to the RET system for ensuring network capacity. Although I'm not an economist, I find it difficult to see how that market could work, because if you've got a shortfall in capacity, yeah, the price will go up, but then by the very nature of building out renewables or transmission, it's a bit lumpy, so you tend to put in a ahead of what you need, which means then that you've got an oversupply, in which case your prices will fall. So it will be a very, very volatile market. There's some more rules around 5-minute dispatch and fast frequency response, again, to help maintain the system. In recognition of the process and complicated and time-consuming process for connecting renewables, let's talk about having designated network assets. And as part of that, as you're probably aware, the renewable energy zones are being proposed, the first one being Central West Orana in New South Wales, which are really outside the energy market system, in that they will be developed under a PPP arrangement. As we understand it, Transgrid is proscribed from involvement in it, and the actual regulatory regime in terms of economic regulation is a little bit uncertain, but rapidly changing times. One thing about the energy sector, it's interesting, if not exciting. This bit is a little bit information dense, so I'll go through it and sort of briefly as I can. I won't try and take up too much time. There's a lot going on. So primary frequency response incentive arrangements this month, September 2022, and it's all about trying to encourage proponents to put in systems like batteries typically, that can respond quickly to frequency changes. Now, frequency on the network changes when there's a mismatch between generation and demand. So if demand is higher than generation, frequency falls. If generation is higher than demand, frequency rises. You'll need fast mechanisms to compensate for that, because if the rate of change of frequency is too high, the network starts shutting down, which happened in the UK about 2 or 3 years ago. A good part of the UK was shut down because of a trip out of the offshore wind farm, I think, that caused rapid change of frequency, which caused a whole heap of other stuff to trip. And then, of course, the lights go out. Semi-scheduled generation dispatch. So this is trying to trace loop power where you've got renewables that are automatically dispatched, and although they do, indicate to AEMO what they think they're going to be generating at any particular time, of course, it is variable. So this gives AEMO the opportunity to dispatch renewables, either to tell them to increase if they can, or reduce, and predominantly reduce. And it's likely to be a disadvantage to renewable generators in that to reduce their availability, if you like, on the network, and they won't be able to generate as much as they would otherwise be able to make. However, all of these are aimed at trying to stabilize the market. Integrated energy storage systems. So I talked about the need for long duration storage. Much of this is short duration with batteries or hybrid systems. One thing that we've been looking at is controllable loads. Essentially data center Bitcoin mining that you can put either behind the meter on a wind or solar farm or proximate to it, and either network operator or the renewable energy proponent can switch them on or switch them off, ramp them up, ramp them down, to help maintain that sort of generation and load nexus. One thing I would mention about it is that if these systems are being put in for not only storage but frequency control, from a commercial perspective, it's very difficult to make the revenue from that bankable. And the simple fact is it's a very low barrier to entry, and somebody cheaper can come along in a very short space of time and basically undercut the existing proponents on that. So if you're looking at anything around that integrates, as most of them do, storage and frequency control, and basically trying to get as many revenue streams as possible, I would always look at the frequency control revenue stream as kind of the icing on the cake, because in the long term it's not necessarily sustainable. System risk control. There's a lot of work being going on around that. There's a lot of work being done with developers, with equipment manufacturers, between AEMO and between the TNSPs, which is having an impact on the time it takes to connect renewables. So the generator performance standard and the connection process is much more rigorous than it was a few years ago. And what also that does mean in the market is that proponents are having to select their technology much earlier in terms of the actual kit itself, as opposed to type, much earlier than they normally would in the development of a project. But again, that is aimed at trying to help manage power system risk and so on. Fast frequency runs, I've talked about that. I'm going to skip it. It's been rolled out now, and it's targeted at fast raise, fast lower. Something that pumped hydro can't do, and partly because of the inertia of the water column. Normally a lot of people think, well, hydro can respond pretty quickly. Well, it can, but you do have inertia in the water column, which means that you can't meet these very fast raise and lower rates, which batteries and inverters can do, or loads that you can turn off, within a few milliseconds. I've talked about the old rule on the management of system strength. It is seen as a bit onerous. on developers, and it is impeding developers because you've not only got the capital cost of those condensers, synchronous condensers, but actually their operating cost is quite high. So this rule is aimed at trying to mitigate that obligation with regard to developers and putting more on the transmission network companies. Now, you might take a view of if it's the TNSPs that start to pick up this, and therefore that then becomes part of the regulated asset base, and therefore consumers pay for it. Is that a cross subsidy? Bit of a political point. Is that cross subsidy? Mums and dads effectively subsidising renewable generation developers who, at the end of the day, are looking to make a profit. Because of what's been happening in the system, the need for EMO to intervene, the need for EMO to potentially dispatch generators or curtail generation, then there's a view that there needs to be compensation for market participants affected by the intervention effects. So that was put in effect in 2021. I talked a little about the renewable energy zones and contestable networks. It's all, if you forgive the phrase, in a state of flux, frankly. EMO is kind of catching up to see how they can operate, what the revenue streams will be. My understanding is the government is effectively funding the capital to allow an accelerated payback to those putting in the transmission infrastructure for renewable energy zones. The rules around storage aren't clear, and that's particularly where you've got generation and load behind the meter. Now, for pumped hydro, it's very clear, and it's been in place for many years. But the Australian Energy Regulator and an AEMO are still kind of working out how they manage to a degree, or shall I say, finesse the rules around and the regulation around storage, and where you have both generation and load behind the same connection point. You're already familiar with the integrated system plan. One of the recent sort of changes to that was kind of to overcome what was becoming a bit of a stooshy, shall we say, good Scottish phrase, conflict between the AER and AEMO, because AEMO put in their plans of all this network build out, and the AER say, well, hang on a minute, doesn't mean to say that we're going to necessarily approve that, because we might not think it's sufficient. So now there's a kind of pre-approval process in place, so that the sort of preferred options in the ISP has a sort of tacit AER sign-off. It doesn't mean to say it's absolutely going to happen though. And the plan itself has evolved, so it's better substantiated in terms of costing, and there's a more integrated look in terms of load changes as well as transmission and generation. So this is the last slide on rule changes. There's an introduction of ramping services, which would help to separate the provision of that ramping service, which is ramping up, ramping down, from FCAS markets. One of the reasons, just the background, why a lot of these rule changes have to be put in is because a lot of the services that you might call essential services were effectively a byproduct of fossil fuel generation, synchronous generation. So things like system strength, sort of rapid change to rapid response to load and generation changes and so on were kind of inherent in the system and part of the fundamental physics as well as the control system of fossil fuel plants. So you don't get the same with renewables. And then I think my last comment on this is there's a discussion around operational security mechanisms. There's a direction paper being issued, and the AEMC this time, which has been a little bit sidelined actually. No offense to anybody that might work for the AEMC, but been a little bit sidelined by the ESB in recent years, and they've got a paper suggested 2 possible approaches to efficiently schedule resources. So market and ancillary services. I don't like the word ancillary service. I prefer, I think WA has essential services, which I think is actually more appropriate, and then non-market services. You don't get paid for it. I thought that was the last slide on this, so my bad. This is not necessarily a rule change per se, but there's a lot of discussion going on about the need for a capacity pricing mechanism, similar to WA. A lot of energy economists are absolutely set against it and just say you should just let the price rise. However, we do need, and we know that we need, a lot of long duration storage, and it's really difficult to see who's going to invest in that. You know, a lot of capital equipment that's going to be sat around maybe for 2 years before it's called upon. And you can't help but thinking either the government, either state or federal, needs to fund it, or there needs to be some kind of additional payment mechanism, like a capacity pricing system, to pay for that additional capacity on the system. Right, so now I'm going to talk about one of my favorite subjects, marginal loss factors, what they are, why should we care about them, why do they care, that's the proponents, and what can we do about it. I'm not going to read through this, but it's defined in national electricity rules. It's quite prescriptive, and it's essentially it's the losses on the network caused by an incremental change in load or generation, and that's the formula. So it's 1 plus the delta change in loss for a delta load increment. Now, a generator increment is a negative load. So if you look at that formula then, and you've got a positive loss for an increase in generation from a particular generator, then automatically that loss factor becomes less than 1. Well, and it's important because it's a direct multiplier on revenue. So a generator gets paid for its megawatt hours output multiplied by the price. So if it's merchant, the spot price, and then multiplied by the loss factor. So if the loss factor is less than 1, it gets paid for less than it generates. And we've seen over time that with the increased renewables and with generation tending to go out more on the fringe of the networks and away from load centres, that our marginal loss factors have become much more volatile, and they've kind of tended to trend down. Now, by definition, at the regional reference node, which is the node that the market assumes all electricity is supplied into and all electricity is supplied out of, which tends to be close to the major cities, conurbations, the MLF there is 1, because you assume they've got no losses for that. MLS apply to load, of course, as well. And there tended to be a pricing signal to encourage generators to connect close to loads and loads to connect close to generators. So this is how it works. So let's say you've got 103 megawatts of generation, loss and transmission electricity with 3 megawatts, 100 megawatts arrives at load. Similarly, if you've got generation of 104.06, loss and transmission line is 3.06, you've got 101 megawatts arrives at the load. Now, the way it's calculated is when you look at that delta change, you look at a 1 megawatt increase in generation, and then you look at how that impacts and increases the loss on the line. And because it's an I²R law, it's not linear. It's a square law effect. So you get a bigger change in loss factor than you do for your delta change in generation. Hope that makes sense. So I've talked about that. So this is what happens if you've got a new generator coming in. So let's say you've got a new generator coming in that's closer to the reference node. Then all of a sudden he's picking up some of the generation that the other generator would be supplying, assuming it's backed off, which means that when he connects, or she, it, I suppose, it actually reduces the losses on the network. And if it reduces the loss of the network, you've got a negative over a negative, which means your MLF is greater than 1. So you can have marginal loss factors greater than 1. And indeed at Broken Hill, 5 or 6 years ago, the MLFs were about 1.05, something like that, because they were supplying the local mining load, and reducing losses on that, skinny bit of wire that goes from, where is it, Wagga Wagga out to Broken Hill, Wagga Wagga, sorry, I'm pronouncing it correctly. But now, because of all the renewables that are connected on that line, the loss factors at Broken Hill have dropped from over 1 down to about 0.78, close to a 30% reduction in revenue for those generators, which hurts. Now, equally, if you've got a load that connects close to a generator, say, then that again would reduce losses in systems and would increase the MLF of a generator. So we did a lot of work for John Lang when they bought a whole portfolio of solar farms and wind farms to see what we could do to improve the MLFs and reduce constraints. And frankly, the only thing that is economic is encouraging load to connect, which is why this concept of controllable loads like data centers or Bitcoin miners is potentially of interest. All right. So I've gone through all of this. This is just talked about the numbers. But if you've got this generator is 50 megawatt hours, you've got a loss factor of 0.9, the revenue will be 4,500. Equally, if it's 1.1, then it's 5,500. So it's material. It is material. And one of the things that I say to developers is, look at your resource risk, absolutely, but look at your marginal loss factors and see whether they need to be investigated early in your decision, either to acquire something or to develop something, because they are material. And I'll go give you an anecdote, and this is kind of public domain, so I'm okay. My team was commissioned by Infrastructure Capital Group to look at very late in the day, look at the marginal loss factors for the Sunraysia solar farm. And it was about 5 days before binding bids were submitted. And so we went to the data room, we looked at the consultant's report on marginal loss factors. We spent about half a day on it, and I rang up Infrastructure Capital Group and said, pull out. I said, beg your pardon? I said, pull out. The MLS are going to tank there. I said, well, just spend $100,000 on this bid. I said, I don't care, don't bid it. John Lang bought it, they wrote off $20 million in the first year on that acquisition. It's important. Oh, that's a map of the network. What that does display is how much generation is being put out at the end of long pieces of line, a long way away from load centers, which is down to the bottom of that picture. So something that AEMO did a little while ago, and I think they're looking at again, is they've actually looked at the resilience of loss factors in certain parts of the NEM, and the middle graph at the top there shows North Queensland, and you can see that absence a significant amount of transmission infrastructure upgrade, absent that, for a relatively small increase in generation, 100 megawatts, you've got a 35% reduction in loss factors. So something that we do is for developers and investors is we produce a MLF resilience map, as you can see on the right. Red says, don't even think about it until there's been a lot of network augmentation. Amber says, do an MLF study pretty early on. Green says, actually, it's pretty safe there. You're right, you're very close to the regional reference. No, loss factors are likely to be good. And I've talked about Broken Hill, so it went from greater than 1 to 0.78, which hurts. And a little bit of a news story around that, which I won't touch on. Oh, this is Bowen Solar Farm, and showing the decline from 0.94, which is not bad, to 0.88 or 0.88 to 0.83. Results in 128 million in loss. So it's material. Right, the last thing I'm going to talk about, and I realise this has been information dense, so I He always said that you shouldn't apologise giving presentations, but I don't agree with that. So I kind of apologise for that. But there is a lot to get through, and there's a lot happening. And as I say, you know, the energy system's almost exciting these days. So I'm going to talk about system strength, which nobody worried about because the fossil fuel synchronous generation automatically, by the physics of the device, provided system strength. So what is it? And I've touched on this before. It's a measure of the network's ability to maintain voltage levels during fault conditions. So a fault could be anything from a conductor clash, conductor to earth short, through to something as benign as a tap change in a transformer. And therefore a network with high system strength will maintain its network voltage within close tolerances. And with a low system strength, it won't. And if you don't maintain the voltage within tolerances, then things start to trip off, and then you end up with a system black potentially. One thing to bear in mind, unlike frequency control, which is kind of statewide, it actually only acts quite locally. And so when you put something like a synchronous condenser to improve system strength, the amount that system strength provision radiates through the system is dependent on the losses on the network, which in turn are related to the transmission voltage. So the higher the voltage, generally the lower losses, and therefore the more system strength can permeate. So I put this analogy in that publication that I mentioned to you, which is managing system strength during the transition to renewables. So we have a rock and a jelly. So the rock is the analogy of high system strength. The jelly is low system strength. So what happens when you get a disturbance? Well, the rock does nothing. The jelly wobbles, and if it wobbles too much, it collapses. I've talked about a lot of this, and it is a result of asynchronous generation, non-synchronous generation, really, going onto the system. Initially in induction motors, induction generators, sorry, same thing. But now more typically inverters. So most renewables, certainly all solar and most wind, are now sort of 4-quadrant inverter outputs. The reason we had an issue is, and I just mentioned, I'm a control engineer at heart. My early career was on guided weapon systems, and I have a PhD in power inverters. I used to run a company that made inverters. So the reason why I mentioned that is that the two are actually quite intertwined these days. So the initial generations of inverters were sort of developed out of induction motor drives, and they didn't really care about voltage and stability, and didn't really care about communicating with other inverters connected to the same network. Now what happens is that you get a sort of an out of sync, shall we say, reaction between. I'll try. Here we go. This was Powling's image. So the rock and the jelly was mine. This was Powling. So you can imagine a trampoline with a full complement of springs and hopefully dampers. You got two stick figures bouncing, not necessarily bouncing in unison, and the trampoline remains very stable. On a weak system, however, you've got less, fewer springs, fewer dampers. It's a weak system. If the stick figures start to bounce out of sync with each other, you get a lot of movement on the trampoline and they fall over. So that's a kind of analogy, if you'll forgive that. There's a lot of misnomer around system strength. What isn't it? What is it not? It's not fault level current. It's not fault ride through. The short circuit ratio is a proxy for system strength, so it's a way of kind of measuring it, but it's not. But that's not strictly what it is, and it certainly isn't inertia. You'll hear inertia and system strength in the same breath from people. They're two very, very different things. Inertia is all about that big rotating plant has rotational inertia, so it's that when there is a disturbance, a frequency disturbance, say, it just keeps on generating because there's a lot of rotational inertia behind it. Inverters don't have that, but it's very different, completely different, and different physics, different methods of resolution to system strength. I've talked a lot about this. I have talked a lot about that, so I'm not going to go into it more. So system strength reducing because of the transition away from synchronous generation to non-synchronous machines, inverters. And my view, and now this is, well, a view, my view, is that rather than syncons, which is a bit of an inelegant solution, the best way to manage it is to improve the control systems of the inverters such that they act benignly and they don't compete against each other on the network. Or better still, and there's some around that are designed to do this. There's a Siemens one, which actually emulates a synchronous generator and has the same control function, so it actually can contribute to system strength. This is a plot from ERCOT in Texas, where they have similar issues to what we have, particularly in Queensland, and that shows an underdamped voltage disturbance. So that's a low frequency modulation of a network voltage around about 6 Hertz. And as you can see, it just increases and increases and increases. And then eventually the system shuts down. So that's why it's important that you need to manage system strength. Otherwise you have more outages on the system. So yeah, so there's a bit of an evolution in terms of understanding of it. As I say, EMO and the TNSPs were called out. There is a efficiency of scale in terms of size of synchronous condensers, but as I mentioned earlier, you can't always have a centralized approach to that, and that's a little bit what that report that I mentioned talks about. And one of the outcomes of our study of doing a lot of network modeling is that the provision of system strength support depends very much on the network. So a low impedance network, well meshed, good N-1 contingency, a large centralized unit works very well. A low impedance network, but not well meshed, i.e. where you could have breakages on the system because a circuit breaker is tripped, then you need strategically placed medium-sized units to compensate for that disconnecting network. However, you've got high impedance network, high low voltage networks where a lot of renewables are connected, say 132 kV, then you're actually better off putting your system strength support at that point of connection. This is in the report I mentioned, but it just shows that green is high sort of system strength support from a condenser syncon. White is none, and you can see on the right that when you have an outage, a contingency, that flow of system strength to the network reduces dramatically. I've talked a lot about this. Mature technology works very well, it's expensive. Just a slide to show that improving the control system does work. So there was an issue with the Ballarat to Redcliffe line. A lot of the generation was reduced to 50% output. Now, fortunately, all the developers use the same inverter manufacturer. So the TNSP, AEMO, the developers and the inverter manufacturer managed to get together and improve the control system on the inverters such that they were benign in terms of system strength, and that allowed then the AEMO to lift its sort of reduction. I've talked about this more elegant solution. ABB have a unit as well. A lot more expensive than your standard inverters, but it's the way things are going. Talk a little bit about the costs, because I've got it in here. Here we go. They're normalized costs. I'll get back to you on that. It's actually in the report, but the life cycle cost is not just the capital cost of synchronous condensers, but the fact that you've actually got to energize them. And that's a significant electricity cost over the life of your wind farm and solar farm. So I can come back to you on that. I'm happy also to share the link. It's on ARENA's website for that report, which does talk about not only the capital cost of the kit, but also the cost of network augmentation that you might need as well, and connection costs on that. But you are looking easily 10%, if not 15%, increase in costs on development of a solar farm or a wind farm.
Yeah, significant.
Mm.
Great. Well, thank you again for your time. And if people do have questions post the call, having digested all of that great content, do send them through and we can direct them through to Stephen. But thank you again, Stephen. That was extremely informative and timely, and we appreciate you joining us for Energy Resource Law Association Technical Insights. Thank you.
You're very welcome.
Thanks
And
all.
thank you for the invite.
No problems. Thanks for
Bye.
joining all. Speak soon. Bye.